A very good morning, everyone. Welcome to Admiral Markets. My name is Chris, and together we will take a look now at the live trading room webinar, strategy webinar on Wednesdays, Forex commodities and stock indices. You can check out our Twitter, perhaps, at Chris Worsing and at Admiral Markets to find out updates, webinars, analysis, etc. Before we dive into today's charts, though, be aware that this webinar is shown to a global audience. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more details. Also, please be aware that trading foreign exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. All right, thank you so much for your attention on that. Today we're going to take a look at lower time frames. Even then, trend, momentum are important, patterns are important, support and resistances, and understanding then what the path of least resistance could be for the trading day. Then I basically identify decision zones and wait for triggers to occur at the key levels or confluence levels as well. So today is already Wednesday, 26th of October, and we're getting close to the U.S. elections, a big political event, of course, that is less than 2 weeks already from now. Nanette and I are going to be releasing basically analysis, what we would consider a full-scale, pretty good all-round analysis. I would hope. It's going to cover a lot of things, so take a look at that. It's going to be probably put on the blog on Sunday, so you can find out by going to admiralmarkets.com, clicking on analytics, and then clicking on Traders Blog. I would expect by Sunday evening it should be there. Sunday evening European time, that is. So hope that you can check that out. Of course, if you're on the website, you can do other things too. Check the calendar, market heat maps, analysis, wave, technical, fundamental, and perhaps even the platforms like WebTrader and MetaTrader 4 Supreme Edition. WebTrader, if you're into wave analysis, also allows you to make basically wave counts easier with the 5 and the ABC available in basically the web browser. Regarding the calendar, let's take a look for this week. Yesterday, of course, typically we have a webinar as well. This week was an exception. We didn't have a Tuesday webinar, but we'll be back the next 7 or so weeks with both Tuesdays and Wednesdays. This week, so far, we've had some central bank presidents or governors speaking. Today, nothing big, but of course you have your usual events. Be aware of that. Consumer confidence, for instance, in Germany, new home sales, and others as well. Just check out the calendar always before opening the charts, and you can find that by going to analytics and calendar. Later this week, we got some GDP numbers. Also, daylight savings times is changing in Europe, but not in the U.S. yet. The U.S. is 1 week later. So the trading times are also a bit different, so be aware of that. We can look at that next week too, but that's already a heads up right now. All right, let's open the charts. I think enough has been said on this. Let's move over and take a look what's going on. On those majors like the euro-dollar, pound-dollar, dollar-yen. If you have any preference, of course, feel free to let me know. We're going to be taking a look at lower time frames today, but we didn't have a webinar yesterday. Anyhow, before trading lower time frames, I do like to look at the bigger picture. So let's do that first, and then we'll take a look at lower time frames. All right. So basically, your dollar is bouncing. As if anyone who looked at my wave analysis this morning was expecting an ABC zigzag, perhaps. That seems to be happening right now. And it's going to be a bit difficult in a way to measure how far the zigzag could go. It could be quite a bit actually to the upside. I think maybe the presidential elections could be playing a role. the question of why, why is price moving? Why is it doing that? Is difficult, in my opinion. Always not that. Oh, sorry. There you go. Thank you, Edith. Is not always very relevant because as a technical analyst, I prefer looking at price anyhow. Why think about the why if you can see the result, the outcome right in front of us? But typically with big events like that, you do get some consolidation, corrections, nervousness. I wouldn't be surprised to see the dollar continue in a triangle, with 2 weeks to go. That is something that I already thought before the breakout happened and after the breakout happened. So we had on the euro dollar, we had, for instance, here, you can see a big triangle, or let me put this here for a second. We had a big triangle here. So when price broke out of that triangle, I expected some bearish impulse, but not a new downtrend. Just because the triangle formation on the weekly chart is quite large. We've got a big political event ahead of us. And from that point of view, this could be a decent bouncing spot, in fact. All right, so when we look at the daily chart, let me hang on, let me get rid of this fib for a second. When we look at the weekly chart, you see pretty strong triangle. So I'm still favoring an A, B, C, D, E. This means that D could be finished. Is D finished there? It could be finished if price were to break below this bottom or show a lot of momentum. Then that could change. I said one of the measuring points I was looking for was this Keltner, the lower part of the Keltner, basically, or the S1 and S2. Anywhere between 107.50 and 108, is an important zone. If price really shows a lot of momentum there, really starts to show a strong bearish candle falling like that, boom, I'm correcting myself. I don't think it's a triangle necessarily anymore. It could certainly be a signal that more downside is around the corner. If price is hesitant here, a bit lower, then it could easily be a part of this correction. This is once again part of D here, C, and all that this downside could be is basically a correction like this, and we might see another three-wave correction up for E, and then finally the triangle could be finished and a new downtrend could continue. So the question is, right now, is this the downtrend, or is this, as I expect, part of the wave D, and we could see a three-wave up? If it is a three-wave up, there could be good potential here as a bouncing spot. It is a reversal idea, but considering the triangle, the bounce could be worth it, despite the fact that it is a downtrend on the 4-hour at the moment. Daily, we see a pretty strong daily candle at the moment. Yesterday, the day before doji, seems like there's a weakness at the moment. We've got multiple divergences on lower time frames, like the 4-hour chart. There's clear divergence there. Price made a lower low. That seems to be double divergence on an hourly chart and lower. Single divergence between these bottoms, certainly present. So that's why, yes, it is a downtrend. That's why I'm hesitant to say, it could fly up a lot. But when you look at the lower, higher time frames, it could be a strong bouncing spot. So how much of a bouncing spot, by the way? Well, if we look at the weekly chart, price should not break above this top. Otherwise, the wave E is invalidated. So if I put a fib from that point to the current bottom, then price could easily go to the 50 fib at 112.50, 111.50, 110. Those are targets we could think of, I think, if a bigger bounce were to happen. So once again, 110, 111.50, 112.50. Let's dive into the 4-hour chart again. Price is now 109. So from that point of view, I think there's plenty of space, actually, 109 to 110, at least we could expect. So if this 1-hour candle, posts like this, if this 1-hour candle closes like this, that looks like a good breakout. We got a bull flag. We got momentum here. That was already the reason why I was expecting an ABC plus the divergence. So if anyone looked at my wave analysis this morning, as I already said earlier, you would be expecting this. Now that wave C could be impulsive, could go pretty far. So from a 50-minute point of view, we see momentum kick in. Now I don't think is a great time if anyone traded it Perhaps upon the break here, that would have been better, or upon the bounce, that would have been better. Now, prices in momentum, not on a 50-minute chart. It could be worth maybe on the hourly chart looking at, for instance, you saw engulfing twins here on the 8-hour chart as well, by the way. And you might be wondering how on earth did I get an 8-hour chart on the chart? That's because of Admiral Markets Supreme Edition. It allows mini charts. When you put a mini chart on, you can choose the time frame of your choice, including 8 hours and other combinations that are not possible on the standard MetaTrader 4. So that's another reason you might want to enjoy the Supreme Edition. Your dollar is really accelerating at the moment. There's nothing we can do at this point, I think, personally. It's very tempting to say, oh, look at the move up. When you analyze, it's never that good to jump to conclusions too quickly because you might be trading it. Often enough, the trade is at the wrong spot and at the wrong time. If you were analyzing it and you took trades earlier, great. Right now is not a good point. I think, though, that there could be some setups to the upside today. Not only these two, but future ones. Just now, I don't think is a good moment. I'd rather wait, personally, for this hourly candle to finish. But we will take a look at lower time frame trading after I finish the long-term analysis on the majors, and that could look differently. I use a different template for that, so we'll dive into that and review that. Now, what would be a good signal? Well, I think an hourly candle like this is a good signal, is a good trigger, but I think a bit of a retracement would be okay. For instance, let's take a look. Let's put a fib on this hourly candle. I think that a retracement to 109, 109 basically, right, should be fine. And then target could be, today, intraday target could be 109.50, probably 109.60. There's an R3, there's a target, fib target there. But we should put a fib on here and here back on. Let's put it there. All right, so price is heading towards the minus 272 target. That I would expect should give some kind of bounce, and then price could go up to 109.30, 109.60 today. Probably further later on this week. All right, on a 5-minute chart, price is accelerating. It's in a momentum as we speak, actually. So typically what happens is that this momentum rides out. This will continue to, this could continue. We don't know how far it could continue, to be honest. The thing is that the momentum could be halfway, it could be almost finished. At this point, what I'm looking for is a chart pattern on the 5-minute chart. I would like to see this oscillator go back to the 0 line. Once it does, and it makes a bull flag, it's ready for a new leg up. And that's the one I want to catch as an intraday swing trade to the upside as a continuation of the bounce. All right, something like this. We have momentum here, a bull flag here, right? The break of the bull flag here, and we've seen the momentum continuation up to the R1. It's right at the R1 now. Will it break or bounce at the R1? Time will tell. If it bounces, I'm looking for the move up to the R2. If it moves up to the R2 right away, I'm still looking for the bounce, the bear flag before taking it, before taking the break. So I'm waiting for a bull flag, simply said. So let's see. It's you're seeing some volatility out to R1 right now. Pound, I think, is basically the same. It is also looking for a zigzag. Yesterday, it broke basically the support line right here, and it fell down to the 78.6 fib. It bounced right at the 78.6 fib. I'm expecting a zigzag to occur. The zigzag on the pound might be a bit less impulsive because if you look at the euro pound, more detailed, the euro pound is moving up slightly at the moment, as you can see. All right, so I think the euro looks a bit better than the pound at the moment. But the pound, I think, would expect to make a zigzag as well, probably to this R1 at 122.50. The dollar yen, otherwise, by the way, it is in a bigger triangle. It's in a downtrend, of course. Strong momentum, pound falling all the way to below 120. Now it's correcting. sooner or later this correction will be over, and I'm expecting the pound dollar to continue with that downtrend. Dollar yen is in an uptrend, but has found some found momentum here. So I'm expecting a zigzag as shown in my wave analysis as well. I'm expecting price to fall down to 103.75 or 103.50. I think those areas are good spots for looking for buys. I will keep an eye on bullish candlestick patterns at those specific targets. I do think that that would complete an ABC zigzag. First of all, I do think also that that overall environment is bullish after breaking the daily downtrend channel, after showing momentum here, after showing a breakout. I do think that this is just a hook back for a continuation of this uptrend. Now, the dollar side is facing some weakness at the moment, so it's struggling to move up, but eventually the dollar will gain its footing again. That could be after elections, for instance, and I expect this to go up. Now, that uptrend might not start at these targets. Those might be bouncing spots, but otherwise the triangle could still continue. So conservative targets, if I manage to catch a trade at 103.50, conservative target will probably be aiming for resistance points up in here at 104.25 rather than aiming for a new high. Just because looking at the overall environment, the dollar might just go range bound. All right, let's take a quick look at the Aussie. Aussie making the bounce. I think Monday was talking about that. The Monday recap video, 61.8 bounce and moving up as we speak. So now it's approaching again that massive resistance level, right at 77. Talked about many times, talked about it here, that price will probably not break, talked about it here, that it might finally break, but it actually didn't. Still a bounce, right? Although there were some good trades here and here to the upside. We talked about that intensively. Now we're seeing, again, a potential bounce here on Monday. And will it break? I don't know. Maybe yes, finally now, yes. But I'm going to keep an eye on these daily candles. Today could be a very important day. It's very big momentum so far. If the close is near the high, yeah, tomorrow we might see that breakout. At this moment, I don't see necessarily any trade setup. Personally, I think that there were some trades at support or upon the break. Basically, now maybe on lower time frames. Let's take a look. It's moved a lot already today, but yeah, it could. I just don't see particular setup now. It might be on the scalping template. We'll dive into that in a moment. Let's see, Kiwi is, yeah, oh yeah, showed that zigzag, of course, last week. Remember, we're talking about that zigzag could go far. That's why I have this fib on, sorry. And it went to pretty far to above the minus 100 target there. Finally making a bit of a bounce. Let's take a look at the bigger picture here. Basically, this upside, yeah, pretty big momentum, in fact, relatively. So it's well, what that means is basically that this is probably more of a correction. The dollar is not as, let's say, as strong, as against the euro and pound. Kiwi drifting up pretty high, in fact. So yeah, that's the dollar strength might not be the best against the Kiwi. At that moment, I think the price has made a pretty strong zigzag here, but this definitely, the last part is weaker than the first part. So I do expect the Kiwi dollar to bounce down just like the other dollar pairs, but the Kiwi dollar might do that a bit less excited or with less enthusiasm. This support level is important, of course. If it breaks that, there will be that breakout. There is momentum here. This was a correction. There is divergence here. So some bearishness is to be expected. Whether that moment is now, I'm not sure. This start is not very impulsive. So it could actually expand with an ABC zigzag up before we find the downside on this Kiwi. All right, so from that point of view, it might follow the Aussie, and if it breaks through resistance like that, we got an ascending wedge there on the hourly, 4-hour chart, bullish candles, daily and bullish candle. Just based on this, just based on this daily candle, it could be worth maybe a daily long with, position here, stop loss below that candle, targeting 73.20. Wait, sorry. Let me make sure this fib is correct. That's important. 73.25. Looking at about a 70 pip risk maybe. Well, let's say to go below 71, stop loss would be 79 pips, and about go at 73.20 would be about 146. It's about 1.7 rewards versus 1 unit of risk. Not bad. Not bad, I think. Of course, that's the daily chart. If one were to look for more confirmation on lower time frames, maybe this 4-hour candle, for instance, a bullish close near the high with a stop loss probably below this bottom or this bottom could be okay too. Let's see. Euro yen, pound yen, quite choppy. Price hitting the target there, making three-wave down, up. Let me move this fib and basically redraw the triangle a bit there like this. And I would use this probably as the main bottom level at the moment. From this point of view, price is pretty much going flat with a lot of ABC zigzags up and down. It's a difficult environment, I would say. Yeah, as you can see, lots of choppiness basically. Now, at this moment, I wouldn't be surprised to see price move back to the downside here. At this moment, it's right at the low, so if it were to make a move up, maybe to these fibs, could move back down like this. Could continue with these ABC zigzags. At this moment, I don't see any trade personally. Now, the Euro yen completed its downside to the target. Remember last week we said a break below support, we could see a move down to these targets. A break above resistance, we might see price move up to the targets and then make a higher high. It broke support, hit the 272 target, bounced, hit the minus 61.88 target, bounced. So from that perspective, it kind of neatly followed those zigzag fib targets there. These targets, or sorry, these trend lines are not valid anymore. All right, so from that perspective, price corrected downwards as expected, going flat really at this moment. But it could be an ABC zigzag, so it could be in a bouncing spot. It is close to support. All right, so from this perspective, a breakout is possible, probably above this trend line. It is a risky environment on the Euro yen, I think, just because of all these zigzags. All right. But that could be a breakout. I'm not a big fan of it, but yeah, it's possible. Maybe a daily candle here above it, like this with a strong close near the high. That bit of retracement tomorrow, that could be a swing trade to the upside to retest the 115, 115.50-ish. If it were to break through support with a strong daily candle, yeah, that of course could see momentum continuation down to retest this bottom. All right, found out eventually did continue lower. Now that took a lot of patience, folks, because there was quite a lengthy correction here. But yeah, finally breaking that was difficult because it broke a couple of times, not moving really too far. So that was a tough one. Yeah, now it might be reaching a more impulsive phase, as if the Aussie, especially if the odd USD breaks to the upside, then this pound odd could start moving down more as well. So today's candle could be important. Bearish, I would expect continuation. Today, how much can we expect today? I'm not sure. Not maybe too much. We're already at S2, so I could get to S3. I'm not saying, but from an intraday perspective, I think I would like to see a bit of correction first before trading it. But if it doesn't, no sweat. I would just skip it. But it still could be well set up for tomorrow, just a continuation to the downside. But at the moment, it's at S2 already. So let's take a look at the odd New Zealand. Now the odd New Zealand is surprising me a bit because I did expect a bigger correction. We did see this. I expected more complex correction further down. Now that does not seem that likely anymore with a candle like this. So the Aussie strength kicking in maybe, it could be that it's kicking in earlier than expected. Today's candle will probably say a lot about it because this is candle number 8. If, my time theory is working in this case, it's going to fail actually, this move up. If it fails, I still might get that complex correction, either as a sideways move like this, or still as a zigzag like this down to lower support. That zigzag seems a bit less likely now that price is really testing this resistance a bit strongly. Zigzags typically don't go that deep. They might go to the R1 here or halfway and fall like that. This one is really testing its limits in a way. Therefore, perhaps a sideways move seems more likely now. But a complex correction, considering the daily chart, seems now more likely, but today's candle, I think, will give me good info because if the daily close is near the high, I'm not holding my breath on this. It could definitely break up to the upside and continue with this uptrend. If the daily candle is showing significant weakness with a substantial candle, I'm looking for at least a wick that's 30% or more of the candle. What that means is that if we take today, now the current candle as an example, the difference between high and low is quickly calculated 117 pips. So 30% of 117 pips is hang on, 35 pips, which means 117 minus 35, 82 pips. The close has to be 82 pips above the high, so the low is 106.37 plus 82 is 107.19. So a close above 107.19, I would be cautious with downside personally. A close probably at 107.30ish would indicate strength or higher. 107.19, 107.30 would be neutral. Below 107.19, I think that probably is a good, decent chance that this is failure and a bouncing spot. The 4-hour chart will give us information, I think will give me information 2, 5 to 6 candles, not breaking this high. If we see something like this, we'll also probably signal weakness here. All right. That's about it, I guess, unless you have something in mind. We can go back to the Euro, Aussie, and Pound on lower time frames, or if you have any specific questions, let me know. We're going to take a look at the lower time frame trading. First, very quick review of the DAX. It is breaking resistance finally with some small candles here, so that could be the breakout to the target after 38.2 pounds. So this could be a zigzag or smaller correction down back to support. I would expect a bounce in this zone. Let me put a box. No box seems to be visible. I'm not sure. Yeah, you get the point. Somewhere in here between 10,740, 10,675. The broken trend line basically. It could be a bouncing spot. This moment, a zigzag seems to be taking place. The price has hit the minus 272 target, and it, I think, could get to the minus 61.8 target. Regarding oil, we are seeing the breakout. It is not able to break the top. The breakout was nice. We're not breaking at the top. I still think that, yeah, it could be double top, of course. It could also just be a small pause before price gets to the target. I think that overall it is showing a zigzag pattern. I do expect a zigzag pattern at the moment just to continue. I do expect, therefore, at this point, that this is a correction here too. Like DAX, I think price could be making a zigzag and could find support at these targets for a bounce. Gold is close to the 38.2 fib, the 1280. That is what I would expect a wave 4. What I'm expecting here basically is a zigzag, and I think that this is a wave 4. There could be one more push down for wave 5 down to the target and the 50 fib, which could be a bouncing spot. It's the same analysis we've been talking about for a while. Price is now very close to that 38.2 fib. And last but not least, the S&P 500. It broke a lot of trend lines, but ultimately didn't go anywhere, and price is still basically in a triangle. All right, so here too, I think elections playing a role. Price staying above the top, but not breaking resistance, staying above these tops here from the past. So I wouldn't be surprised if it stays and goes flat like this. All right, so let's continue now. All right, your dollar. I'm looking for a bit more than this. I'm looking for a bull flag, not a small bounce like this. The R1 being respected. That's not so surprising, but the respect has been small so far. Just a couple of candles. It's already pushing up as we speak. Will this continue, or will it be a bounce? Could be both, to be honest. I think I have no particular interest here at all. I think it could be a bounce, it could be a hook back for weakness, it could be a breakout. I want to see more of a pattern here on the euro dollar at the moment. Pound following suit, and the Aussie is, where's the Aussie? Here. Is following suit as well. Yeah. Thing is that with the Aussie, it moved already quite a lot today. I would probably rather look for the daily candle to be finished. You know, at this moment, I don't think it's a great spot to trade. But tomorrow, or maybe after the retracement, it could be a bit better. I do think it will move up. So, but at this point, I'm not sure if it's really a good spot. It could still continue this hour. But if not this hour, then I would be definitely expecting a bit bigger correction going sideways. Craig has a good comment. Gold could be because of safety, with the political events coming up. And yeah, that could be very true, Craig. That gold is kind of getting that safety in times of uncertainty like this. And I totally agree with you on that. Technically speaking, I think that gold does look bearish, but if you take the politics into mind, that could change things. I think 38.2 fib, still could be a very bearish spot, but could it go to the 50? Certainly. Right? Could it even go to the 61.8? Yes. So I'm going to have to take a look at how price responds at these fibs. It could also just expand like this, going mostly sideways for 2 weeks. I mean, 2 weeks, it could do that easily, and then break down after the elections. If I'm wrong, and this is not bearish, rather than prices already bouncing at the 38.2 fib, then the only way I would know about that is price would have to really show, strong candles here like this, would have to eventually break above the 61.8 or show strong momentum candles. Alrighty, so let's take a look at lower time frames here. There are a lot of alerts going off there. I'm switching templates, or I should say I'm switching profiles. So bear with me there for a second. You can save profiles at the bottom. That suit yourself, of course. You can save groups of charts that fit nicely with each other, or if you use different ways of analysis. If you're trading with Neted's ACU MM system, for instance, you could make one profile with that. You can have a profile with blank charts. You could have a profile with waves, for instance. Those are 3 different profiles. You can find that if you didn't know here at the bottom. You see I have also a few of those. So now this template, a bit of a warning, will look colorful. It is very heavily indicator based. It is not based on waves, counts or discretionary trading patterns. None of that. So it's quite a bit different than what we normally look at. It's very colorful. There's a lot of indicators. So yeah, different emphasis there. What we see now basically is the trend template. The trend template has moving averages, it has Heikin-Ashi candles, and it has some oscillators, and it has fractals that I specifically use, are custom-made fractals that show different time intervals than 2. The standard fractal is 2. These show various fractal levels at 6 and 13. So at this moment, this is the analysis template on the hourly chart. Well, we obviously see a strong downtrend, and we can quickly calculate here. Price has fallen quite substantially. Let me, for the fun here, see if I can get the Fibonacci sequence on this chart. Hopefully it will work. Last time it did. Yeah, great. I had some period of time that this was not working too well, and now it seems to be fixed. So the euro dollar, I should say, fell all the way down to close to level number 5, All right, counting from pink, this is 1, 2, 3, 4, 5. Your dollar, for your dollar, 5 is quite far. It did touch the long-term moving average quickly here, so typically I reset the count there. Well, it's possible, but for the moment I think it's still okay to look at it like this. So we can see it's quite stretched. There is, if we look at these oscillators, divergence, as we already know, and we got green. Most of all, above all, although it is below the long-term moving average, we have divergence and we have green candles here. All right, so from a scalping perspective, I think the upside is the way to go. The oscillators are retracing back up. Other time frames are in a downtrend, but we already know that this could be retracement. So if we zoom into lower time frames, let's start off with the 15. Hang on, it seems to be loading the 1 minute for a moment. Okay, there we go. 15-minute chart. This is the pivot point. The daily is 108.90. Price is now at the M3. And blue candles showing momentum to the upside. On lower time frames, we have momentum to the upside. We got blue, blue, up. That's confluence, and blue here indicating bullish candles. And we have it above the pivot point. We have moving average up. So seems to be a little doubt on the 15 what the intraday direction is. 5 minutes showing the same thing. Let's dive into the 1 minute chart. Prices at the M3 at the moment. And wait, these arrows, seems to be something wrong with these arrows. Hang on. The M1 is basically showing bullishness as well. But there's some retracement already, of course, to be found on the M1. A big momentum here. Now it's making some kind of retracement, as you can see. So the 5 minute chart, we have some hesitation here too. But all in all, I think it is just making a bit of a pause for that bullish breakout, as said earlier. All right, so now I would, from a pattern point of view, be looking for a larger 5 minute correction. This 1 minute or this lower time frame template that you see here is basically looking for the trend, whatever time frame that may be. In this case, we're looking at lower time frames, looking for a trend, looking for a pullback. So that means that, for instance, the candle switched to a different color and then a continuation again. So on a 5 minute chart, when we see momentum here, we see a pullback here. The continuation signal is this candle, for instance, right there. Now that's valid for the 5, but also for other time frames. That's basically the whole idea. Quickly explained is trend, pullback, and continuation. This concept really could be used on all the time frames with this template. It doesn't really change. It doesn't change when the time frames are changed. That's the same. So on a 5 minute chart, we're looking for a new dip down here and a continuation. It could be that gray candles appear here or red candles. Once price then makes that pull flag or correction, we'll see the candle color change here and we'll see a continuation like this. Now for those of you that don't have this template, what I use here is a 21 EMA. 21 EMA high and 21 EMA low. So what you really need to know about this is that is the way I look at retracements. All right. All that these color calendars do is make it just simpler for myself to see the switch. All that basically the candles do is compare the close to these 21 EMA band. All right, so if the close is above it, it will be blue. It's very simple. If the candle closes in the band, the candles will be gray, and if the candle closes below the band, the candles are red. So that's the formula. You have it right there. It's no secret. This is for you to use if you want to try it out. Try it on demo. Of course, you know the risk involved. But I asked someone or paid someone to actually to make this for myself, because then it's just easier to see that switch. But that's the idea behind it. So we need a close basically in this area before we have the pullback continuation. Now that makes sense also if we think about it, in the sense that there's a confluence there with the original analysis, right? On the euro dollar, I said I want to see a bull flag. Where would that bull flag go? I would not be surprised, obviously, to see that go back to the 21 EMA. So yeah, the system, the strategy here, my kind of discretionary analysis, kind of find a confluence there and match each other. All right, so this is what I'll be looking for on a 5-minute chart. Now, on a 1-minute chart, let's take a look. Sometimes I do that, not too often to be honest, but sometimes yes. In the summer I was doing that a bit more. You know, markets don't move as much in one direction throughout the week. So that becomes a bit more, let's say, interesting or makes it more tradable. But here you can see we had a red candle here. If we get a new red candle, I think there could be a bigger ABC zigzag. Now, if I would be really scalping it, you know, one might be even more of a counter trend perspective and expect it to correct a bit deeper. You know, there could be some space here, but I personally don't think that that is a good idea at the moment. It is a 1-minute chart. It is counter trend, and it could really go flat like this instead. We don't even have the second red candle, but even if I see a second red candle here, if we get a close basically below the 21 EMA on the 1-minute chart, it might go nowhere, literally. It might just do this and then go this. I don't think it's a good idea. But then that said, it might correct lower. What I'd rather wait for, though, is price on the 5-minute chart to make that correction and then bounce. Now, what if price bounces here instead, if it doesn't make a bigger correction, right? On the 5-minute chart, what could happen is price just goes sideways and then it still continues. It doesn't get into the 21 EMA band, for instance. So let me go back to the 1-minute chart. In that case, I think probably the best is to wait for the break. And there will be a pullback to, well, there's a good chance there will be a pullback to the 21 EMA band like this. And I would take the second change of the colors here. So once again, if price makes a break like this on the 1-minute chart, pushes above these tops, there's a good chance there will be a hook back. I want to see it candle close in the 21 EMA band, and then a close above, outside of it, above it, and then that would be the bounce trade. Break, pullback, continuation. Bounce trade, I think, and target the R1, M4, and R2. We talked about those already. On the pound, probably things are not too much different. You see here blue candles, price going back to the 21 EMA band, closing in it, therefore candles gray, closing above it, therefore candles blue, and you know, the turn back is in the signal. It is also bouncing off the pivot, so that could have been an intraday swing, scalp, whatever trade. I personally was more interested in the euro, as we know, but if I was using that template at the time, that could have been a way to look at it for upside. Let's dive in. To the minute chart, you can see an example of when price gets too red. Sometimes you see that zigzag correction, but these, don't forget, this is a minute chart. Look at this. This part of the zigzag is just extremely small. We're talking about a few pips, and often it's much, much, much better, a million times better probably, not just skip this and look for this instead. What the 1 minute chart sometimes offers is the end of the retracement here, for instance, as the oscillators turn back up, right? Those offer kind of first moments to catch that continuation. Let's take a look at the pound yen and DAX, because those are bigger movers. So, you know, the lower time frames are pretty interesting typically. Now, on a 1 hour chart, we do have a mess, as we know, very rangy, triangle-y, not going anywhere. You can see how price is responding by going up and down over the 144 EMA. And I was saying earlier on the pound yen that I would like to see it higher before trading it down. It does seem to be moving a bit higher at this moment. On a 50-minute chart, price is heading back to the pivot at this moment. You can see that there was momentum here, a switch to gray here, and a continuation here. That short did not move all too far, but did move something. It moved almost 40 pips. But you got to also realize that at, you know, some points like this, here and here, we got the same, but the candles really didn't move anywhere. They just went sideways like this. And that's when, you know, a bigger correction sometimes takes place. On a 5-minute chart, yeah, so at this moment, the hourly is in a downtrend, but it's really kind of choppy. I don't think the pound yen is really great at this moment, to be honest. We'll take a look at the lower time frames here. Probably maybe even better. Could be, look at this up and down, but probably at this moment better to, I would say probably just to look for a turn at resistance. So I'm not sure if this template is the best for that. This template is the best when there's a trend, momentum, basically pullback continuation. It is not necessarily the best for reversal trades. It was not intended to trade reversals, so it's possible, especially because of the oscillators. All right, let's take a look at the DAX. It's not here. Let me add the DAX quickly. All right, there we go. And let me add the template. There we go. Alrighty, so a lot of oscillators here. I mean, not all of them are really necessary. It's more for confluence. But anyhow, the DAX itself was moving down, but it is an uptrend. Looking at the 4-hour chart, we see green Heikin-Ashi candles. All right, we see price pretty close to the bottom of the bands here. Hourly chart 2, you know, everything is aligned to the upside, but it is making a correction to the downside. It's retracing basically as we speak. 15-minute chart therefore showing red candles. That's logical because it's showing an ABC correction downwards. 5-minute chart is red 2. So everything is red on lower time frames, but higher time frames is showing that this is a correction. So basically there are a couple of options. One is to trade with the intraday momentum to the downside. The other would be to wait for the intraday momentum to finish and then trade the bounce or the continuation back up again. Now, that momentum down could last for a while. We don't know how long that is. Basically, target could be all the way back down to the long-term moving average, for instance. So there could be some space left. On a 50-minute chart, for instance, if we were looking for a continuation of the correction, then here could have been such a moment, or here, as price basically shows a second continuation. Here's a first red candle, here's the second, here's even the third, fourth, as basically it shows it breaks below the 21 EMA, pulls back, breaks below, pulls back, breaks below, pulls back. So that is already behind us. So on the 50-minute chart, we don't have that opportunity. On the 5, that moment was also behind us here and here. That would leave the 1-minute chart, which had those potentials here and here and even here now. So those would have been scalping trades to the downside. Now you don't want to scalp, of course, or I don't try to avoid scalping as much as possible when there's big support levels nearby or resistance levels. With the DAX at this moment, the minus 61.8 target is important. 681, 10,681. So if a retracement still occurs on this 1-minute chart and then there's a break below it, there could be that space down to the to that target. Now we want to be careful. This could be just with 1-minute continuations, although it worked out fine here and here and here and here. At one point, you're going to get a 5-minute retracement. If that occurs, if you get a 5-minute retracement, price will get up all the way here. On a 1-minute chart, what could happen is this. So this particular short on a 1-minute chart would actually be shorting a larger correction. Do you see that? That 1-minute setup would turn into a loss then if it's not filtered out. Do you see that? Because it's a 5-minute bigger correction. So you would see upside, the move down, but then the move up again, and then maybe down. So this 21 EMA band is vital for understanding pullbacks and continuations and trends. It's the key element in it, and it's basically, I think, an interesting way of trading it, because when scalping, of course, there are a lot of ways of trading it, but it's easy to get caught in a trade that this is in a way trying to find an environment where there's a good chance that price will push in our direction, because we're trying to trade it at least with the intraday trend. All right, now sometimes you do have conflict between the intraday trend and the bigger trend. So, do you still trade with the intraday trend, or do you wait for both to be aligned? That is an important question. It depends on, in my case, it depends. I will be open to it. I rather trade when both are aligned. I sometimes trade when both are not aligned. It depends on the space that I see until the bigger support or resistance is there. If you're starting out, probably better to do wait for the alignment. If someone is more aggressive as a trader, it probably, or wants more setups, then probably more doable to look when they're not aligned. All right. I'm seeing an alert here that says Euro Yen. I have alerts here that are connected to the Heikin Ashi candles, and it says Euro Yen. Let's take a look at that. is basically giving a heads up saying, okay, listen, on the euro yen, we see bullish candles. Now, of course, we see with our human eyes, we see that the 144 EMA is close by. So that could be a bit of a factor to reckon with and say, okay, maybe it's not a great moment. But Heikin action candles are green. We saw momentum prior to that. All right, so strictly speaking, it's in a intraday uptrend. Okay, that's basically the point. 50-minute chart is showing basically the break and pullback continuation. So the alert is saying just that. Listen, it is showing the continuation here after break pullback within the uptrend. So from that point of view, that could be a setup. I think we talked about the euro yen already, and I was saying that it could be close to a breakout to the upside. I don't think I talked about a trade though. But looking at this template, it is ready for that. It's above the pivot. When trading this, would probably go with a stop loss below this bottom here. Yeah, at the minimum below this bottom. And let me get rid of this. Or even the M2 and target R1 probably. Now, if price goes back into this one time, I would be okay. But if it then bounces again and shows signs of struggle the second time, and it just doesn't move forward, I would probably move it to break even and trade management, manage a trade like that. Euro odd. Let's take a look. Euro odd. Intraday time perspective is down, although showing some hesitation at this moment. 50-minute chart showing a bear flag, basically price almost making a great candle, but not yet. As you can see, somehow it's closed though. It should, I guess. It's strange that there's no great candles here. Anyhow, so that looks to be like any moment it could break this bear flag for continuation lower. Now, I can see why, Greg is talking about bottomed out, and could be possible indeed. Got divergence between these bottoms. Daily and weekly charts, of course, are indeed right at these support levels here. You see those fractals as well. Price is trying to break through them though. Maybe he already has. We'll take a look at the naked charts in just a second. I mean, from this chart is more trending focused, so we're not going to see bounces maybe as quickly, but considering the momentum to the downside at this point and the let's say sideways correction here, it looks like it will continue with one more push down on the 15-minute chart. But let's take a look at the naked charts. Before we do that though, any questions on this, this way of looking at lower time frames, or all time frames in fact, but also on lower time frames? Any questions on this? Do you have any follow-up things you want to discuss? Just a new alert popped up. Odd USD. So, a lot of things here, a lot of colors, I know. So that's not for everyone. Some of you probably vanish from this trading room just because you're like, oh no, way too colorful. But it all has a place, and it basically just wants to simplify things. Now that might not seem so for those that are looking at this template for the first time, because you get kind of bombarded by a lot of colors and it might seem complicated. But ultimately, it's actually meant to simplify things because the coloring just makes it easy to spot things quicker. Okay, we got green, everything's blue here. We got an intraday uptrend. I can see that pretty quickly within a second. 5-minute chart. All right, we got blue, gray, blue again. Momentum up, good. Good to go. Trade could be from right here on the Aussie at 76.86. Trade is up 13 pips. Stop loss could be at break even at the moment, looking for a continuation on the USD, right? So that was within a minute. So a lot of things make it look complicated, but if you just look at confluence, look for the colors to match, it's actually, in my view at least, makes it quicker and simpler. But that's indicator trading. Not all indicators are necessarily needed. I just like have it here for confluence. I think 2 could do just as well, to be honest, for this type of trading. It's a different type of trading than naked charts, looking at candlesticks, looking at wave patterns in general. That it's totally different indeed. But there are traders out there that are very indicator based. I don't know if Dogan was actually the one who asked about this. I'm not sure if he's in today. Oh, Dogan is there. Oh yeah. So yeah, that's basically what I use. Net uses Accu, for instance, Accu Memory Math System. That's more intended specifically for either 15-minute charts and 1-hour charts. So it's like a scalp swing trading. He uses his ECS MACD. This is actually not part of the system. This is added. Then it's an indicator here that he uses for AccuMM. And yeah, he uses basically a combination of accurate pivot points, Memory Math, this ECS MACD for making decisions on the 15-minute chart and 1-hour chart. So yeah, Dogan is not doing anything at the moment because of the 4-hour charts. He says I hate them, but he loves the 5-minute charts. And yeah, they are not really matched up at the moment. That's very true. But you can see how the 21 EMA band gives pretty accurate, pretty nice continuation moments. It's not perfect. Don't get me wrong. It's good to filter, good to be cautious, because all of these moments that price switches are not going to be, the ones that work out. I like to look at the moments where do analysis myself and do some filtering and choose the ones that I think have the best chances. But ultimately, it does give kind of a good trigger. It does give, because if you're doing analysis, sometimes you get stuck in analysis. This template helps me find a trigger moment. Let's see. Dogan's talking about the dollar CAD. Let's see. What's the trend? What's the intraday trend? Intraday trend, I would consider up at the moment, but there is, there's some hesitation here at this point. There's some correction going on indeed. Let's see. Let's switch back then. Otherwise, not so much comment, so maybe not so interesting for most of you. But if anyone finds it interesting or wants to know more, please feel free to send me an email if you have any follow-up questions. But one of the keys is fractals, 21 EMA, intraday trend, and here's my email. some comments. First of all, Craig wants to look at the euro odd. And let's do that. And Craig also said, took his first real trade last night in at 108.70. And it's a long. Good. I was hoping, I wasn't sure anymore. That's great. 108.70. Excellent. That trade is up and your dollar seems to be pushing now as we speak. Again, in any case, I'm expecting continuation even if it doesn't, even if it makes this bull flag that I'm hoping for. But 108.70 is a great price. I guess you took it here then and not here, or maybe you took it there right at the turn. Nice. Anyhow, great job there, and that's looking very, very good, I would say, at this moment. Euro odd. Let's do that now. Also, follow-up question: could you POC1? I don't use POC, but Nenet does, I think. Well, Nenet, well, we basically use point of confluence or control. Both are the same. Is basically where you see multiple support and resistance levels. So you have a daily top, you have a fib level, you have a pivot point. You know, that's basically showing multiple confluences there. I think we have a webinar on it in YouTube you can find for sure on Confluence. But it's anywhere. Nenet uses Camarilla as an analysis. That's one point. If he finds then probably something else with it, maybe that's why he writes POC1 or POC2. I do use a bit of scaling out indeed. Scaling in, not so much. Often I just take a trade at a time. It makes things quite messy, I think, if scaling in is added too, but it's possible, of course. Have to be a bit more organized, maybe. But it's possible. But I don't know. I'm just, it's me mentally easier just to take a position and scale out. But that depends from trader to trader. So your odd daily chart, breaking below these bottoms. Try to break, pull back, continue. Good 4-hour candle. I don't think that this is over yet, indeed. Now, of course, there could be eventually presence of divergence, potentially, but not yet. Especially if 5 to 6 candles are still above. If eventually 5 to 6 candles don't break this low, there could be maybe a bigger correction. But for the moment, I'll be cautious. Technical analysis posts are from Nenet, except Mondays where I have a video. Nenet, I think, was bearish on the dollar yen. I personally was bullish, if I remember correctly. We both were right in a way. I mean, there was a bounce at the zone that Nenet was expecting. It just didn't move as low, I think, as he originally targeted or had in mind as a target. Because then eventually it did bounce up. I think that point was here. Nenet was looking for a bounce here. It did bounce. I was looking for a break. It broke too. So, both things happened in a way, just funny enough. Your odd bigger targets. Let's take a look at some bigger targets quickly here. Let's put some targets on this move. A bigger bounce could happen at 104, 104.75, 140, sorry. A lot of confidence there. 2 targets, S2. So I think there's still some space to fall to that level probably. Shorts at 89.80 on the euro pound. Double top, maybe double top. It's possible, of course. I wouldn't be surprised if it actually breaks the top a bit. Go up to 90. But yeah, that is a bouncing spot indeed. I agree. It is it's the top of the Keltner here, and it could stay in this range. I'm expecting a range to continue on this euro pound. So from that point of view, I wouldn't be surprised if that is a bounce. I personally would not look for a pending order. I don't like the euro pound, but it could be a bouncing spot indeed. All right, folks. Well, thanks for joining me today. We've got more webinars tonight. And then takes a look at session trading. Tomorrow we take a look at how and why software is so important for your trading. And next week we're back with all kind of webinars again. Hope that you have good trading, and I look forward to seeing you in these webinars. Cheers, everyone.